to Leaders of Tomorrow, 18-hour special initiative that celebrates the undying entrepreneurial spirit of micro, small and medium enterprises. Today, we have a very special show for you. I caught up with B. Sriram, MD at SBI. He overlooks the corporate banking group at India's largest lender, and I spoke to him about all things finance related to MSMEs. Here's part one of this special interview. Thank you so much for speaking with us today, sir. Let me kick this conversation off by asking you about, the financing options which you've pioneered specifically for e-commerce companies and startups. What has been the response to that? What has been the thought process behind that, and how is that really panning out right now?
The response has been quite very encouraging, I would say. And you see, the thought process goes back to almost 1.5 years back when we were looking at a new model to fund MSMEs. The traditional model of balance sheet financing, looking at the balance sheets and then trying to fund, and then not remaining in touch with the MSMEs for a year till the renewals start to peg in. I think that was outdated, and we would wanted to see a model whereby we could track and trace the cash flows in a significant way. And some of our conversations with the e-commerce players, all the three major players that we had, Snapdeal, Flipkart and Amazon, led us to believe that the cash flows that are residing in the bank's accounts is one way of tracking the strength of a customer, and the other is the strength of the cash flows that come through the e-commerce players, whether by way of sales or by way of purchase. And if you have a combined initiative by which we could take in a model of creating a loan process to just track cash flows, count the working capital cycle in terms of number of days, and design a product over it. It will be both advantageous to the customer because he gets the cash right through the system. It's easy for the bank to track and place strength on the customer. And significantly at the other end is that we could easily, because the risk to such products is significantly lower than the balance sheet funding, a lot of advantages by way of better interest rates and charges could be given to the customer. So these were some of the thought processes, and over the last maybe about 6 months back, we did launch a product, and it has seen very good traction over the last few weeks. The product typically goes in a way that the supplier to an e-commerce player has a certain history behind it, and over a period of 1.5–2 years, the sales that he makes to the e-commerce player is tracked and given to us as part of our process requirements. And based on that, we work out the requirements for the customer over a period of the working capital cycle. It could be as low as 7 days, it could be as high as 3 months, and over that period we will manage to to calculate the requirements of funding for that company, and then place the funds to his request. And the loan is auto repaid by the proceeds that come by way of payment through the e-commerce players themselves. So it is in terms of time taken to process, it's significantly reduced. In terms of funds being made available to the vendor, it's again significantly improved. And then on top of it all, the position that we always used to have in terms of weakness for SMEs in terms of receivable collection and not being monitored on a daily real-time basis, that was also taken care of. So it was basically a win-win situation for all the three stakeholders in this.
Okay, so we do have a weekly call-in show on the Leaders of Tomorrow, and the majority of questions has always been from MSMEs and SMEs and entrepreneurs who want to know how they go about making themselves ready for investment. What are the top 2 or 3 things someone who's looking to raise funds, whether it's from a bank or in some cases, some rare cases, VCs, but how they go about making themselves ready for that?
I think the few prerequisites that the banks will look at is, one of course is there has to be a business plan. If the person has an interesting track record in the area in which he plans to do his business, I think that will be helpful. But business plan that could be checked for its viability, and the small contribution, which we call as a promoter's contribution to the equity of the for the project in which he is trying to build. These are some very few basic prerequisites that are there, in which are vetted by our relationship managers in a way. I think it all depends on in what scale and what industry and what is the interest of the entrepreneur in that particular segment in which he would like to do his business. There is a very big issue regarding the marketing and sales arrangement, which is very important in terms of in case the business has to succeed and succeed well. Most of the entrepreneurs are very good technically. They do have a product which is good, but unfortunately they somehow fail in the area of sales and marketing in terms of trying to finally find a buyer for their products. So in that sense, a tie-up with an end product OEM or a major would surely help in whatever way that these people are trying to produce. And I think that would give it significant confidence also to the banker that all ends of the product cycle are taken care of.
Sure. Has the NPA situation that the industry has been facing for a while now, has that particularly hit MSMEs?
The NPAs, actually the MSMEs had were at the front end of the NPA cycle. As typically what happens is that as the economy starts to trend downwards in terms of growth, and there are issues with regarding some of these industries, the first people who take the hit are the MSMEs, because they have very shallow pockets. They can't survive if there are some receivables that are not paid on time, and thereby some of these people tend to get hit faster than the mid corps and the large corp. So in that sense, the NPA cycle actually hit them slightly much earlier than what we are now looking at. Actually today the NPA cycle has gone and hit the large corporates more than the MSMEs. Besides this, as the economy starts to recover, and which we are feeling that it will do in the next year or so, as it does, the first people to again come back is again the reverse side. The large corporates there will be demand, and from which the MSMEs again will come into play. So it is definitely a challenge for the MSMEs in both ways, whether when the NPA cycle is on and when it is off. Both ways they find some challenges. And that is one of the lessons that most MSMEs probably would learn, is that to continue to have a certain buffer for these weak times, because the time taken for recovery of certain issues in the economy, I think the MSME should be well prepared to face that time in a significant way. So when there is an uptrend, I think you need to save more. You need to put in more buffers in your balance sheet, and try and ride the rough times as we go into them, which will come. Because in an economy, it's some cyclical. Sectors are cyclical, and there are cyclical problems of demand and supply.
Okay. So when you're saying put in buffers in the balance sheet, what advice would you have in terms of how to go about building those buffers?
Basically, the business has to be run. The money that is being earned by way of business profits and gains has to remain in the business. Now, there is always a temptation that when you are in good times, some of the money that you've made in the business and during these good times, you tend to take it out and put it in unrelated areas. Now, those could be not non-cashable in times of when the things get worse, and so there is a problem that these are all stuck in certain unrealizable sort of assets, which is no use to the company in terms when the economy starts to go into a downtrend. So the suggestion is, of course, that build those buffers within the balance sheet, keep them in cash surpluses, and try not to take too many risks. There's always also a tendency that at times you try to become speculative when you are in good times. You don't hedge your forex risks. You have significant risks in terms of forex currency, which may go haywire. And those are things that the MSME should learn and put in a policy and try to run the company within those policies.
Sure. All right, let's take a very quick break on that note, but don't go anywhere. We're going to continue the special conversation, the special interview with SBI. Just stay tuned. Welcome back. You're with us here on Leaders of Tomorrow on ET Now, and I have a special interview today with B. Sriram, the MD of SBI. Here's a slice of part one of that conversation. According to the latest available figures and reports, your lending to SMEs and MSMEs has fallen very marginally, but it has still fallen. Is that because of what has been happening? We've been talking about the NPA mess in the industry, or is this just cyclical and you expect it to go back to industry standards?
It's a bit of a combination of both these issues. So actually, after a long time, after almost 2-3 years, this year we have grown and grown, although in small single digits, about 6-7% growth in MSME. But yes, it is a good sign that we have grown this year after a couple of years of stress and pain. As we said, there are a couple of things that we have done. One is, of course, that we have put in place a lot of risk management practices within the bank to ensure that the business that we do is significantly much better than what we used to do earlier, and we call them risk mitigated products, in terms of products, and that product range is actually growing at about 15%. It is the balance sheet funding that has actually degrown, and that is why the overall growth is about 6-7%. We are still about 12-13% of the overall loan book of the bank is to MSMEs in terms of exposure, and there is a significant size, almost 180,000 crores of amounts are exposed to the MSME sector, which is significantly higher. I think it could be an asset size of a mid-sized bank as well. So that is the quantum of exposure that we have given to MSMEs. And as I said, out of 180,000 crores, about 70,000 crores is to what we call risk mitigated products. That is the one that I explained earlier in this program in terms of tracking the cash flows. There are some products that we do based on discounting of LC bills. We have asset-backed lending to MSMEs, where again, if there is an asset which backs the business, the advantage of interest rates pricing is given to the borrower, and there's a significant difference in the pricing when there is an asset to back it. And of course, there is also, we have this credit guarantee trust scheme of the Government of India, which allows credit on zero security for amounts up to 1 crore rupees.
Since SBI, of course, is the front runner in the banking industry, would this lending then to MSMEs and SMEs be true for the rest of the industry as well? Are we going to see this upturn coming in a year's time from the rest of the banking space as well?
I would imagine so, because you see, there has been a lot of thrust to the government last couple of years in terms of pushing up the manufacturing space. And there are a lot of people in terms of ancillary units which need to be there to provide to the larger corporates in a significant way. Any business requires a number of smaller players who will supply these small parts to make up the whole. And as the push goes for reforms, and also for some of these initiatives have been taken in the defense sector and the railways, even in smart cities that is going to come up in a short while, there will be a huge requirement for smaller units to supply to these larger OEMs. So in that sense, I think there is going to be a big opportunity for us. The Mudra scheme itself was a big success, and I'm sure there is enough scope as we go forward in the next couple of years to push our lending in this sector.
The cost of lending, the cost of funds to MSMEs and SMEs, where is it at right now, both for yourself as well as for the industry? And are you willing to hazard a guess on where we could see interest rates heading in the near future?
Cost of funding for MSMEs typically is slightly higher than the well-rated corporates. You see how the way the pricing works is that it is linked to a rating policy, and to that extent most of these SMEs on balance sheet tend to be a little weak because of different reasons. And in that sense, you won't get a good MSME of BBB rated or above, in terms of rating, and thereby they do fall slightly higher on the interest rate curve as when the lending happens. But the banks have actually designed various products, and when it is product based lending, the interest rate tends to go down because the LGDs for banks are much better as we do a product. And as I said, some of the products that we have done which have mitigated risk for the banks significantly. As we drive those products, I think there is enough scope for us to bring down the interest rate in those products. So, and that is what has happened. I think 25%, about 15-25% of our growth has come from these risk mitigated products. So, in that sense, I would imagine that there could be a two-way pricing in this. One where it is balance sheet purely driven by ratings, strength of the accounts that they present, and the other is of course the product wise rating or product wise pricing, which will be significantly better.
Sure.
In terms of interest rates, I would imagine already I think since the beginning of the year, since the MCLR has kicked in, there has been a fall in interest rate from the base rate to the MCLR, and as we go into the year, as we more and more corporates and more SMEs will, as they renew their agreements with us by way of limits, most of them will push from the base rate regime to the MCLR regime, and to that extent they will all get benefited by this. The MCLR regime obviously looks at the marginal cost and other than the historical cost, and to that extent I think as and when there is a downward shift in interest as the repo rates start to trend down, there will be some pass through to these corporates as we go down.
Sure. Are you happy at where the MCLR regime is right now for the industry? I know it's very short. It kicked in on the 1st of April, but for the industry, are you happy where it is at?
Now, looking to the current scenario and circumstances, I would imagine that this is a fair rate that we are at. As we go into the year, I think there could be some other possibilities which we can look at.
Okay. I want to talk about what's happening in the globe, sir. What advice would you have for MSMEs in terms of how to insulate themselves against the global risks that are taking place right now?
Basically, the risks are in terms of exports that or imports that you probably know the MSMEs would be having, and in that sense, I think the global scenario is such that you can't take risks which are without any policy behind it, and that's why, as I said earlier in this program again, that there has to be a hedging policy for most of these MSMEs in what exactly they'd like to do. Typically, we insist on 100% hedging for all the MSMEs so that we don't allow them to take unnecessary risks. See, any risk where any price that the exporter or importer arrives at with the overseas buyer is based on a certain business model that he feels is viable at that point of time. Now, to take a risk on that and saying that the price would go in his favor is to assume the worst. Now, and that is why we say that if it is hedged at that price and the business model becomes viable at that price, it's better to be safe than to be sorry. And we have seen it in more ways than one. In the derivative crisis of 2008, a lot of MSMEs did find a lot of problems in terms of, because they had gone on certain speculation, maybe certain would say the probably wrong advice and so on, and they did burn their fingers in a significant way. So, there is no point in going into such unnecessary risks at the time when the global order today is not as strong and robust as we would have liked it to be. There are still a lot of uncertainties in what the Fed is going to do, what Brexit will happen, and so on and so forth. So, it's better that you have the business plan ready and see the viability of your products and try and make sure that the business that you do is at prices that makes your business viable. The second part is, of course, that the person with whom you do business, it's a very important part of your business plan. And in that sense, I think we have seen in worse times that the orders which are supposed to be firm are either repriced or they are either cancelled because of various circumstances. And in that sense, I think you need to do a little bit more due diligence on the overseas parties with whom you have relationships. And in that sense, I think they could take the advice or the benefit of the bankers' relationships between their bankers in India and the overseas buyers' bankers and wherever they operate. I think these are very significant issues that can be addressed.
Okay, you were talking of some of the global risks. Which of these is going to be the most concerning for entrepreneurs? Which one should they keep their eye on? Is it going to be the Fed? Is it going to be Brexit? Has Brexit been factored in already?
See, there are at various points of time there are going to be risks. It's not that there is one risk and then with the passing of that date everything becomes orderly and good. Today the major thing is that the world economy itself, the growth rate is not very significantly higher today. Each country is facing a different problem. You have Brazil, which faces different problem than what China faces. You have Euro and Japan in negative interest rate zone. You have the US who have issues with their growth and their low inflation. So every region is actually is faced with different challenges, as you may call it. So in that sense, it's the MSMEs would need to look at the region where they operate and try and see as to what are the risks that could happen in that particular region and try and address them. I don't think one size fits all sort of solution can be made available.
With that, we conclude part 1 of this very special interview with SBI, but we will continue this conversation tomorrow on part 2, where we will continue talking about finance for MSMEs. Do remember, you can write to us at leadersoftomorrow@timesgroup.com. You can reach us on social media using the hashtag LOT, or you can call us on the number flashing on your screens. Thanks so much for watching.
Fintech is a very significant portion of our life. Actually, if you see, technology as such for the bank has become a very, very important clog in the wheel, in the sense that today almost over 75% of our transactions are through the anytime channels, that is the alternate channels.